of the footprint line, and the third point is the point created by the first point is created by the third point is created by the first divergence from there you draw a line between them, that line, of course, it is the first layer line. Okay, so what I actually mean here, the first 2 points, the first point, it is the second point of the footprint, because what I mean is that in a situation where the market moves like this, and it moves like that, and it moves like that, the first 2 points, let's say the market, it is coming while trending down like that. So now the first 2 points that oppose the trend, these are the first 2 points. You're going to be drawing a line between them and name that line a footprint line. And now the second point of the footprint and the third point, it is created by the first divergence normally, or no, first or second divergence. Let me do this. Let me just say first or second divergence. And you find that sometimes you draw your your footprint line, your first layer line, and it is about here, and you have to make your entry about there. And you find that when you make your entry about there, the second divergence, you can be able to make your entry there while going up. And now when you connect the second point of the first layer, the second point of the footprint line, and where the second divergence happen, you find a very important base there. And like from there, it's a situation where you'll have to come and you'll have to wait for the market to break this first layer. Immediately after the market breaks the first layer, we know that it's about to go into the opposite direction. So whatever trades that you took at a particular time, you exit them. After you exit, then you take the opposite direction from there. Let me remove this for now. All right, so The third step, like I've just also said, so this is just a step where you're actually starting to draw lines, right? And let me see. Third step, what you'll be doing here, you'll be waiting for the market to break the first layer line. The reason why you have to wait for the market to break the first layer line is because of we want to be convinced that the market is about to go into the opposite direction. So after you wait, like I've indicated, after you wait, you draw your line here, you draw your line here. After you wait for it to come and break here. But at that particular time, let's say you are not on any trade, right? Because if you're on a trade, immediately when the market breaks your first layer, that's when you know that, okay, and you are on a buy, you know that, okay, you have to close and take a look at the sell. So now the market, you'll have to wait for it to pull back. So third step also includes wait for the market to break the first layer and pull back or retest to create the second point of the footprint line. So what I mean here is that when you wait for the market to break the first layer, before we know that for a fact that market doesn't move in a straight line, so you just have to wait for it to come and break the first layer. After it breaks the first layer, you wait for it to create the pullback, and that pullback, it will form the second point of the footprint line, meaning now it is also linked to this first step. It will create a second, because what I'm saying on the first point is that the first 2 points that are opposing the existing trend, draw a line between them, and that line will be calling a MMC footprint line. Forgot to write down line there. So after this, what is going to happen? Let's step number 4. I think one more thing I need to add on the thing is because of let me put it this way. The second point of the footprint must not be higher than, the second point of the must be not be higher than the first point when looking at a sell setup, no? And vice versa with the buy setup. All right, so it seems like this time will elapse. Let me I'll make a quick copy of this so that I can copy and paste after when we come back. So I hope you guys understand these steps. The reason why I don't want to move too quick is because I want everyone to fully understand. And don't worry, we still have time. We'll be doing a lot of Zoom meetings. So the first step, it is you use stochastic indicator for entry for entry purposes. After that you look for divergence using the stock let me just say use the look for divergence between the first and the second point the footprint. You look for divergence. Look for divergence. You look for divergence between the first and the second point of the footprint line using the stock. Then fifth step, what is going to happen in the first step? You're going to wait This is spot the crossing over between the two lines inside the stock at the overbought or oversold depending on whether you are buying or selling. Yeah, after you spot that, I think the and execute. So this way you'll be placing your first trade and execute. The sixth step is look for more divergences on smaller time frames after the first execution and add trade using I'm saying same thing at the same time. Look for more divergences or smaller time frame after the first execution. Okay, yeah, this is it. And look to draw the full footprint set up to be able to spot the first layer while your trades are still running. And after that, if the market breaks the first layer, take all the profits and look for a new opportunity. Let me just say look for a new divergence
Sir, can you please scroll down? I'm struggling to see what you've written after the if.
Okay. All right. What I'm also going to do now, I'm just quickly going to. So we take this a picture. I will send it to also to the group now. So after this, we're going to focus on the new meeting where I'll be implementing this thing. Where I'll be implementing practically what I wrote down here. So immediately after the meeting ends, I will immediately send a new link and you guys will join in again and we'll take it from there.